let's come back to fire. Volatility is fire. If you're a normie, you run away from fire. If you're Henry Ford, you put the fire into an engine, you put it in a horseless carriage, and you create an automobile, and now people can go. And then you put it into a plane and a train.
That's good.
So engineers are putting volatile, you're a nuclear reactor in the spaceship. It's scary in the submarine. But Bitcoin is like the financial fuel. These things are crypto reactors. It's a technically better way to do this, and it's the volatility that's actually the motor that's driving the portfolio or the treasury forward.
All right, guys, we're coming in hot. I think what you see right there is we got to get a better description. We need a detail-oriented explanation of Bitcoin. I mean, you see what Michael Saylor's talking about, and I think when we get into something new, if it's new for you, you want to have somebody with some charisma, somebody who kind of simplifies things in a way that you can understand it, but also is an intelligent individual. You don't want to be pandered to by somebody who's gimmicky or trying to be Mr. Fly by Night, or who's just telling you what you want to hear so that they can, essentially throw a Ponzi scheme your way or something. That's what most people feel when they get the corner car salesman vibes from somebody. Now, Michael Saylor does not have that vibe. He'll give you some great analogies, like what you just heard about fire and just how, the volatility of Bitcoin is a feature, not a bug. But at the same time, he's an MIT graduate. He's owned a tech company for, I want to say it's like 25 years now, big in the dot-com bubble. And now he turned MicroStrategy into essentially a Bitcoin treasury company. So first off, I'm not an expert on any of this stuff. I've been involved in the cryptocurrency space, though, for almost 7 years. So I'm getting familiarized with a lot of things and learning a lot of things that I didn't know prior to. I have no finance background. But in my opinion, people that come to this table when it comes to cryptocurrency with no financial background, you have a better opportunity if you're a thoughtful individual who's not impulsive and who is willing to do the due diligence and learn a new technology or a new sector or a new skill. If you approach it this way without the financial background, you're going to be more open-minded to actually what it is. And I'll kind of lay out a couple small things for you. When you think about Bitcoin, just know that it's a peer-to-peer transaction network so that you can actually trade using Bitcoins, which is the unit of account on the Bitcoin network, trade back and forth with one another without a central intermediary like a bank. There's way more to this, but just basic. Okay, if I wanted to send you some cash and I didn't want to use the bank or Zelle or Western Union, if you were in Moscow, Russia, or something like that, you could use the Bitcoin network. Now, that's in its original form. Its problem that it solved was no double spend. So like if there was any other program out there, you could just make up a ledger or make up a unit of account and send it and make it up again and send it again. There was no ledger that was immutable. So Bitcoin has an immutable ledger. For now, there are caveats to that, but it is the most safe computer network out there. So any computer is, corruptible, just like any nation could come down, right? The United States runs the entire earth, the entire world. But there are theories or there are scenarios where we could lose that hegemony, right? Same thing with any computer network. It could be the most sound money, the most sound network, the most robust infrastructure, the safest thing that you could ever imagine when it comes to computer security, which Bitcoin is. There's nothing that holds a candle to it. But somebody could come up with a scenario where you could put a bug in the network and ruin it. Would it happen? In my opinion, no, not in any time soon. And even if it was to happen, there's so many security measures that it's safe enough to where you could trust that more than you could trust actually the networks that run our banking system. Imagine those networks could get corrupted too. I guarantee you don't carry a whole lot of cash. You probably keep most of it on your phone, right? It's just a ledger. It's just numbers on a screen for you right now. For the most part, you use Apple Pay to pay. So they would be able to corrupt the banking network quicker. It'd be easier to hack that than it would be the Bitcoin network. Now you might be thinking, Rube, that doesn't sound very plausible to me. This is a lot of money that goes into the security behind the banking infrastructure, and that really holds up our entire country, right? So you probably technically have the military and any governmental agency backing the banking system, however that computer system works. That's true. So, and I don't know how that all works. I just know that I trust the bank, right? And I'm fine with that. I'm also fine with trusting the Bitcoin network in the sense that once you learn enough about it, you realize that it would technically be harder to break that Bitcoin network than from what we can know as civilian individuals. We're not in those, branches of government to know exactly how secure the network is. From what we know, Bitcoin would be safer than the banking system. It's that safe. Okay. And if we don't know enough, we can know that they're very close to equivalent. So you can trust this network and you can trade stores of value or unit of account, Bitcoin. If you had 1,000,000 Bitcoin, you could store it safely and trade it with somebody the way that you trade in commerce with goods and services and go to work and receive a paycheck with fiat money or United States dollars. And the fiat is it's represented by a paper note, right? It's backed by the federal government, represented by a paper note. That's called fiat. So we do everything in fiat currency, USD, here in the United States. You could technically do that with Bitcoin if it was not so volatile, right? Here lies what Saylor was talking about. So it is a safe network. It is something that we could all lean on and use. But at the same time, it's very volatile because it's a newer asset. It's only been around for since 2009. I think it was the end of 2009. So going into cat, get out of here. Yeah, I'm gonna get your ass up here. So 2009 is when it came out, and it really started catching wind and being available for people to buy and sell in like 2010, right? So we got about 16 years total that the network's been up and running, and about 15 years of people that are trading the actual currency of Bitcoin. So very new asset out there, and I really do think that when you think of it as a cryptocurrency, that's something that people have they get confused and they get a mental block. They think, well, it can't be a currency because it's very volatile, and that's not a store of value and a unit of account that we would want to use because we don't have any stability to our purchasing power. Correct. Therefore, I would agree. We shouldn't look at this as currency. I understand technically it would be categorized as a currency based on how it was designed. But at the same time, I would look at it more as a store of value, digital energy or digital real estate. It's all those things because it's programmable money, right? Now, there's plenty of videos where you can learn more in depth on what Bitcoin is. But what I want to talk about is now that we see it starting to accelerate, right? And we see it starting to take off, people are starting to notice. You're starting to have people talk about a strategic Bitcoin reserve here in the US. Many companies are already adopting this idea of using it as a treasury reserve because it appreciates in value better than any other asset. And if you go look at the charts, we're talking, it's an alien asset. It's not even like anything else. Your typical returns, I want to say for the S&P 500 are like between 12 and 15% or something like that. But if you go Bitcoin, you're looking at 140% annually, even with the ups and downs, if you include all the volatility. I'm probably wrong on those exact stats, but it's somewhere in that ballpark. So it's nowhere in the same camp, right? Plenty of caveats to that. It's becoming more, it's developing. It's becoming a little bit more widely, not accepted, but widely understood, and people are investing in it. And as it becomes a larger asset, it's at 2 trillion roughly now, it'll have less volatility. So you may not see those types of returns, for the next 20 years, but who gives a shit, right? You're not going to get any of those types of returns out there in any other asset, right? You might get lucky with something like an NVIDIA stock or an AI stock. But unless you specialize in that sector, you're not going to know where to invest. You're only going to know after the fact, after it's become something big. And you're like, oh, I wish I would have got in on NVIDIA. I wish I would have got in on, Microsoft or back in the day, or, Apple before it was good and things like that. You're not really going to know. Not to mention there's a lot of risk when you invest in companies because you have P&Ls. They have to be you look at their profits and loss. You have the dynamics of the company in general have to continue to stay profitable. P&E, profit over or price over earnings. So you have all these different things that are measured that can change when you put a long enough time frame on it. It might be hot for 4 or 5 years, but what about in 15 years, right? So if you think about Bitcoin, if you're new to it, you're wondering, how could I trust it in the next 15 years when I don't even know anything about it? And the last thing you'd be imagining is it's going to continue to go up, right? The interesting part is it is going to do that. It at the rate that it goes up is subjective, is up for debate. But for our conversation here, what we should be thinking about is how can we look at this now that it's starting to become more of a conversational thing. Everybody's starting to learn about it and hear about it now. Before you know it, it's going to be a very big deal, being that it might be a United States Treasury asset at some point, like a stockpile at minimum. It's not going to be anything specifically like gold, but people will call it digital gold because I've heard it called everything: digital energy, the digital universe, the digital real estate, digital oil, everything. It's just like people can't, they have their own little views of what it's like, right? But as it starts to become bigger and more understood, what we really need to understand is as you learn about it, I think the biggest thing that I could convey over to anybody that's actually getting into this is that cryptocurrency in general, starting with Bitcoin specifically, because a lot of the other cryptocurrencies that are out there, there's thousands of them, are like small businesses that are going to fail. They're like, oh, they had a good idea and maybe people like it and maybe you were given a good sales pitch and maybe some people made some money for a little while, but there is no stability to it and there really is no fundamentals. Bitcoin has the fundamentals, there's stability to it. As you learn about it, you're going to start becoming a little bit more sucked in to learning more macroeconomic factors so that you understand what it really is in response to. And that's what I would like to make the biggest point of, is that Bitcoin specifically came out as a response to our monetary system being broken. And this has been happening for many, 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 many years, right? Without going through a massive history lesson on this, which I would like to, but this particular video, we want to just hit some hot topics real quick. But as we started getting United States Central Bank, or the Federal Reserve Bank, right, is a central bank of the U.S., started in 1913, I believe. Again, I'm probably going to get a lot of these wrong, but around that date, my memory, I'm not going to remember these things. I don't have them written down. Around that time, around 1913, as the Federal Reserve came in as our central bank, slowly but surely, they started doing different things with our money supply and management of our money. Now, many people are we got to, they're against the Federal Reserve. We got to absolve it. We got to destroy it. We got to get it out of here. It's corrupting everything. I would agree it is corrupting everything, but the problem is the alternative is still corruption. Humans are going to human. We're all in sin here. And the idea is we're going to continue to corrupt the money, even in our own. Even if we have a central bank, they're going to corrupt the money. If we just let freedom reign here and we all have individual rights and we have a real free market capitalistic system, we are going to corrupt it. Because how often have you seen people take advantage of other people? The moment we know we're stronger than the other individual, we're going to take advantage of them. Or if we're smarter, we're going to take advantage of them. In all cases, no. In most cases, maybe not. In enough cases to corrupt the money, yes, it's going to happen. So you get the Federal Reserve corrupting the money. You have people corrupting the money. On either side, you have a ditch on either side of the road. Now, that being said, because the Federal Reserve has been in charge for over 100 years now, everybody's blaming them for corrupting the money, which they have, and once you go from 1913 to now, they've done many different things. Bretton Woods Agreement, to where we made the U.S. the world's reserve currency. Then we depegged from the dollar in 1971. Then in 2008, we started doing QE and QT, quantitative easing and quantitative tightening. That's what I wanted to bring up. Secondly, so when we started doing quantitative easing and quantitative tightening, I'll explain it to you right now, Bitcoin came out as a response to that. Now, it wasn't specifically like, oh, QE started, let's create Bitcoin. Cypherpunks and everybody had been trying to create digital cash for a long time. But it finally came to a culmination, coincidentally, right after they started doing QE. And I believe that Satoshi Nakamoto, we don't know who he is. He went anonymous after he created Bitcoin. We don't know if that was an individual. We don't know if there's some people that think it was the CIA. There's some people that think it was just a group of people. It doesn't really matter. It's just too coincidental that Bitcoin came out right after we started QE and QT. And when I show you what this is, I'll explain it right now, you'll understand. When you start putting the pieces together, you'll start realizing why it's better to view this as a response to the broken monetary system. Quantitative easing is when a central bank, like the Federal Reserve, creates money and uses it to buy financial assets, such as government bonds or other securities. Goals to increase the money supply, lower interest rates. Let's not go too far into that. Here's the idea. What's going on here is the central bank buys government bonds or treasury securities, which is in a sense how they print money. You hear nowadays, oh, they're printing so much money. We're spending more money than we have. Our debt is going through the roof, primarily because of QE. Stimulus happens, and it happened during the COVID and things like that. But part of how that stimulus happens is all through quantitative easing. They're not taxing everybody by triple and then taking the money and then putting the stimulus. They do QE. The central bank buys government bonds or treasury securities. So you have the United States Treasury. It issues a note saying, hey, give us some money. We'll pay it back to you with some interest. Federal Reserve goes, okay, here's your money. And then you might ask, well, where's the Federal Reserve get it? They create it out of nowhere. That's where it comes. It comes out of nowhere. You can look this up. They literally create a ledger out of nothing. It's not backed by anything. It's just a new computer ledger. Tell the Treasury security or the U.S. Treasury, okay, now we created a ledger for that. Here's the money, and it's just a ledger from their bank to the Treasury's ledger that they use, and then that's distributed out to all the other banks in the U.S. in different ways, which I couldn't tell you if I tried, right? So that's QE, and that's printing money out of thin air. That's not going to stop. That's not going to stop anytime soon. It's not going to stop as a tool anytime soon. They're actually not doing QE right now. What they're actually doing right now is QT, which is very responsible, believe it or not. So you might be thinking, oh, we're printing so much money. And in a sense, we are. There are other ways that we're getting money at this particular time. Other nations buy these bonds, treasury securities, that is. Companies buy them. You have municipal bonds or municipal organizations that purchase these bonds as well. There's money that can be recirculated in to the Treasury from many other areas. But when people don't want to buy those bonds, they just go to the central bank, right? So this is where you get debasement of the currency. To the Federal Reserve's benefit, they're actually doing QT right now, quantitative tightening, right? Which is the opposite of QE. Instead of adding money to the economy, the Federal Reserve reduces the money supply by offloading assets from its balance sheet. So how that works is what in QT, the Fed technically sells assets back into the market. So now it's the opposite. Now it's the Federal Reserve saying, hey, we want to reduce the money supply out there because we have too much inflation. We've been debasing the currency like mad drunken sailors. So now what they do is they will technically say, okay, I want you to give me some money, and then the Federal Reserve will pay you back later with some interest, right? So now the Treasury or anybody else who has these bonds says, okay, we'll give you this bond, or they're going to buy that bond. And so they're going to get all that money out of the supply, right? So if there's a bank, they're giving a bunch of money to the Federal Reserve, right, as a loan, and the Federal Reserve will pay it back to them over time with interest. So, but immediately it removes liquidity out of the market, right? So in either way around, though, you're still creating money because when they do that, where's the interest come to pay them back? Again, they have to create the interest out of nowhere. So it's always still printing money. It's just different ways of controlling how much liquidity or money is out there in the market or in the world. So you have the United States money supply, M1 and M2. M2 is the big one we want to look at. And then you have the global M2. And at the end of the day, it's being debased by globally around 8%. So they're printing about 8% of new dollars or new currency globally every year. So when you start realizing all this, you start realizing, wait a minute, the money's broken. The world is actually getting to the point where we're in this debt economy. Bitcoin was a response to that back in 2009, right? And if you understand exactly how Bitcoin works, it has programmed into it a way to be deflationary and to be a store of value that you can't print more of. That's where the aspect of it is unique, because even like Ethereum, it can be deflationary, but you can always print more of it. I still a believer in Ethereum, different video I'll explain, and I've done it in the past, but Bitcoin has its usage. You need them both. I mean, I mine Bitcoin, so I'm a fan of Bitcoin, of course, but I hold Ethereum, amongst other things, because I'm degenerate. I'm a degenerate in my entire life, but especially when I think about cryptocurrency. Very degenerate, very degenerate. I don't trade anymore. Okay, sometimes I do, but I try not to because it can be dangerous. So that's my little spiel. You're going to see Lavish on here, James Lavish, giving you a little breakdown on QT as well. So I just wanted to do a quick one on here, and I wanted to tell everybody, if there's anybody still paying attention on this whole thing, is buy Bitcoin, pay attention. Now's the time. Like I tell my daughter, take every dime you have, every dime, I don't care what it is, just every dime you possibly can. Stop going on vacation, stop buying shit, stop celebrating holidays, stop buying things for everybody, stop wasting money on whatever the hell it is you're wasting money on, and buy every single dime you can on only two things. I'm not giving you financial advice, not that it would matter if I did anyways, but everybody has to say that on here, and trust me, I ain't doing none of that. But I'm just saying, do what you got to do. But I would say, when you look into this, only look into Bitcoin and Ethereum. Do not put any money anywhere else until you learn what you're doing, because you're going to lose everything. It's just too volatile. It's like way up, way down, right? So either way around, it's been good. We'll talk to you again on this, and we'll see you on the next one.